All right, traders. So the micro price action has flipped for the market, and the bears are now officially in control for the micro, and they are still in control for the macro, as you know. So within this video, I'm going to be doing an updated price action analysis on the SPY, walking you through both sides of the trade, right? When to be bullish, when to buy the call options, when to be bearish, when to buy the put options. We're also going to be doing the same for stocks that I'm going to be reviewing, such as Tesla, Snapchat, Mara, BBIG, MSTR, DWAC, PROG, and then AFRM and Disney, right? We're going to have some very important updates. I'm also going to be sharing with you a very important gap close reversal strategy and lesson. Huge shout out to those of you who were in Trader Society and took advantage of this very lucrative, trading opportunity to buy put options on the SPY, as this was a predictable opportunity and this was the strategy that I teach within Trader Society. So let's get into it. I'm going to walk you through some of the basics here. Let's get into the strategy. So in terms of the SPY, like we have been pointing out here on this channel, we talked about how SPY, it cracked this key support right here at 456.60. Once that support level cracked, it had a massive pullback, right? That's when the macro really kicked in for the bears. Once it cracked that key support level, and it quickly crashed, into the low 420s. Then it quickly rips back up. And then I was explaining to you guys, if you see this right here, this is key for bears. If this previous support reacts as a resistance level, which it did right here, that means that the bears are still in control for the macro. And there was also a gap that was waiting to fill right here at 457.35 towards that key previous support, right? So with that being said, when you see the SPY fill that gap, I'm going to draw, a line right here and show you where the gap was waiting to fill right here at 457.35, right? So we know that's a key level where if it reacts as a resistance level, the bears are going to step in and the SPY is going to get crushed. Just look at what happened prior back when it turned this into a key resistance level right here. It got to a high of 458.74, dropped all the way to 444. Very similar move in terms of today. So in terms of predictable trading opportunities with this strategy, this is truly going to show you how phenomenal and simple this strategy can be used. So what do we know in terms of this whole strategy, right? We know that 456 is a key support level. Once it cracked, the bear stepped in for the macro, huge downside potential to 420. So if it rips back up very quickly and reacts as a resistance level like it did right here, that's going to be a great opportunity to grab some puts. And then in this situation, it gapped down and there was a gap to fill at 457.35. This gap up was, this move we had recently, this gap down, that was a gift in terms of when it hits 457.35 and fills this gap. If you see the SPY forming resistance, if you see it struggling to break out, like I said, you're going to want to grab some puts because that's when the bears are really going to kick in for that macro crash, like we saw happen right here, where the SPY gapped down and went all the way to 445. Like we saw right here, where SPY was at 458.75, it reacted as a resistance level, and then it dropped all the way to 440.50. And then in terms of today, I mean, this was just the dead giveaway. Like, guys, honestly, like, this was, in terms of predictability and in terms of phenomenal setups, this is going to be one of the best setups of the year. And I really do hope you guys took advantage of this and I prepared you for it. I was literally, you guys know, I was playing the SPY puts yesterday into the close when it was filling the gap right here. This is the gap fill level. Once it was filling the gap, I was playing the puts right here. Rinse and repeat, just keep on doing it. But the dead giveaway was the pre-market in the CPI report. The CPI report came out, massive sell-off. It went all the way to 451. So if you see it rip up like that instantly at market open, that's a micro gift, a micro spike to take advantage of because your confirmation was in pre-market. Plus yesterday, it was struggling to break out yesterday, right? We know the SPY was struggling to break out. It was struggling to turn that key level into support yesterday. It was already downtrending here during extended hours. And then we also know in the pre-market, you have the CPI report that drops, right? As soon as it drops at 8:30 a.m., massive sell to 850. So if you see that spike, that's a gift. And what you can do, you see right here, you had, two opportunities to take advantage of that and take a look at this new previous closing price, this new gap that was waiting to fill above as well. You can use this key level, but guys, this is the gift, man. You had the negative confirmation in the pre-market, the massive gap down. When you see that, massive move on the upside, and SPY, goes back and it fills the gap. Like I told you guys, I say it all the time, wait for SPY to go back up to fill the gap. Once it fills that gap and you see it's reacting as resistance right here, it's struggling to break out, it's starting to break down, it's forming new lower highs, it's selling off. In terms of confirmations, well, okay, what would be some of the key levels where, so we wait for the gap to fill. Once the gap fills, you see some bearish candles coming in, give it a shot, like right here. Or you could wait for some new lower highs. See how these are new lower highs forming right here, new lower highs forming right here. As soon as it, takes out key support right here, right? These are all confirmations to play the gap close reversal on the SPY. See how there's a gap to fill right there. As soon as it fills the gap, sells off. As soon as it fills the gap, sells off. History has shown us multiple times right here and right here, when this hits that 457 level, it sells off very, very hard. But the CPI report in the pre-market price action was the dead giveaway that, this just had a massive crash. If you see this rip up very, very quickly, that's your confirmation to buy the puts once it, hits that previous closing price. And it also goes to show you that you want to trade at the best prices. Use the gap close reversal strategy at the best prices. People who bought puts at market open, they got squeezed, they got slaughtered, right? You got to wait for the gap to fill above. Once the gap fills, you see it struggling, reacting as a resistance level, then you grab the puts at the best price. That strategy that I teach you literally got you in towards the top. So that's kind of the analysis in terms of SPY's overall price action. It has repeated history, one time right here, two times right here, now three times. So in terms of how's the daily looking? In terms of confirmations, the market has flipped. We are seeing now a bearish micro price action. That's what we're currently seeing on this chart here. I do believe the SPY is going to go lower. So here's kind of where I stand on this right now in terms of the micro perspective. I think, either tomorrow or into next week, we're going to drop to about $443.83, right where this key support is, which was previous resistance. If that reacts as a support level, then the SPY is going to start to push back up to the 451 range. Once 440 cracks and reacts as a resistance level, that's when you're going to see the next macro crash, the next big crash. In terms of how low is it going to go from, fairly crashing quickly from that level, you're looking at a pullback to around $433 to $430, right? So what I'm thinking is, I think within some time for the short term, for the micro, we're going to drop to about 443.82. If it doesn't crack right away, then it's going to push back up and probably form some lower highs at 451. So we got to see. You just have to understand that this is still a price channel. The price channel has been from 457 to 443. In terms of micro flipping, this is a very bearish confirmation, but we still haven't cracked 443 for the micro, and there is still a gap to fill above at 464.72. So just keep those things in mind. Overall, though, the macro is still bearish. And overall, in terms of the micro, it has flipped. This is now micro bearish. It just has to take out 444. If it doesn't, it rips back up to about 451-ish. Look for the new lower highs. Overall, though, for the macro, I think the bears are definitely going to be winning this move here. So we'll see. It's in this price channel. It's just there's been too many fake outs. Fake out here, fake out here, fake out here, fake out here. There's just too many fake outs within this channel, which is all showing signs that this was just that micro move that we talked about where, SPY just had a massive sell-off. It's simply just going to go back towards this previous support. And then once it turns it into resistance, that's the true confirmation that the bears are in control for the macro. So for the macro, we're getting phenomenal confirmations. And then, like I said, things have flipped for the micro. The bears are now taking control for the micro ever since the gap has filled. And we saw that gap close reversal in this very bearish candlestick on the daily. So that's my thoughts on it. For the short term, 443.82 minimum. If we see a bounce, then we're going to go back up to 451, try to form some new lower highs. If it cracks 443, we're going to be on track for 433 to 430 within some time, like 1 to 2 days from it cracking, 1 to 3 days from it cracking. But yeah, that's the thoughts, that's the analysis, and things have definitely flipped here for the short term. So we'll see. I mean, it's still quite a battle, but overall, the bears are definitely showing true strength for the macro, and they're starting to come in here for the micro, especially with today's price action. So that's my thoughts on the SPY. Now, in terms of Tesla, guys, Tesla looks like it's just done. That's what it looks like. Tesla right now, what it's telling me is it's telling me it wants to fill this gap next week. That's what Tesla's telling me right now. There's a gap to fill at $846.35 in terms of buying Tesla. Wait for the gap to fill. If you see it forming bullish confirmations right here, look to day trade it. If you see a bullish candlestick, something like this, something like this, something like this, a nice green bullish candlestick coming the daily towards end of power hour, look to swing trade calls when it's trading at this 446.35 level. If you see the bullish confirmations, right, have to trade with the confirmations. With that being said, you know, it's just been consistently failing to break above this 943 level. You got a very bearish candlestick coming in right here. Market's not looking good for the micro and for the macro right now, and you got this gap to fill. So I think next week we're going to see a gap fill on Tesla. I think this is going to hit 846.35 in terms of when that's really going to happen, is when it can crack the low of this price channel, which is going to be $880. So my overall point of view in terms of Tesla is, I personally think next week my target is going to be $846.35 next week, and then that's where you can look for the potential dip buying opportunity to ride it back up to like 880 to 890. But yeah, that's my overall thoughts on it. It's just, it's had way too many fake outs, and it's just due for it to break down below this price channel, below this 880 level, to fill that gap. So that's my thoughts on Tesla. And there's a lot of strategy, there's a lot of strategies you guys can do with these options. You can literally do like passive vertical put options in a situation like this and do very, very well, like a two-legged option. There's a lot of things you guys can do with options. So just make sure that you really, in terms of these videos, you really take advantage of the price action, the strategies, and the price targets, and then you can decide how you want to trade it, whether that's like a more advanced options trading strategy, or whether you just want to get a call or a put, or whether you just want to do shares, right? You get to decide what you want to do in that sense, but just really use this to your advantage, because I'm telling you, this price action, like this should hit 846 next week, and there's a lot of things you could do with options to do very well in a situation like that. In terms of Mara, for Mara, I would just wait for the first red day. Wait for the first red day. Once you see the first red day, buy puts. Very, very simple. That's what I would do on Mara stock right now for a quick micro in and out day trade. In terms of tomorrow, here, let me turn on extended hours here real quick just to see if we're doing anything real quick. So yeah, it is gapping down. So the best price for all these is really going to be the previous closing price in terms of like puts tomorrow. But this is on track to open up red tomorrow. So 28.99, 28.82 today's closing price. That would be the best overall prices on all these today's closing price in terms of buying puts tomorrow morning. If we can get a spike back towards that, closing price of today, right? Previous closing price tomorrow. So yeah, that's kind of what to look for on that. That could be a nice little first red day micro put opportunity if you can get in towards a resistance level. Things have flipped once again for BBIG. Things keep flipping for the micro. So in terms of BBIG, just by studying this candlestick right here, whenever it forms that candlestick on the daily chart, it usually does have some major downside. For the most part, I mean, we have to wait. We have to see. The volume is still strong on this particular stock. Main thing though is, main key, it needs to stay above 340. For this to continue to run for the micro, it needs to hold 340. If 340 cracks, it's going to go back to like 290s. So that's my thoughts on that one. 340 holds, it's still bullish. It goes to 360. If 360 breaks out, it goes to 380 to 390 to fill the gap. Overall, I'm still leaning on the whole bearish micro, from like the bearish macro sense of this stock. I think we're going to be heading back to 290 fairly quickly on this one. In terms of MSTR was another stock that had a phenomenal gap close reversal. You can see there was a gap to fill right here at 457.35. We actually talked about this gap close reversal play in one of the earlier live trading streams that I did this week. I told you guys, Once you see this gap fill, if you see it react as a resistance, you're going to want to look to grab the puts, ride this back down to fill the gap below. So in terms of MSTR, we got the bearish confirmation on the daily. Where I think we're heading, I think next week we're going to be heading to a price target of 391.64 to fill this gap. And then once you see that, react as a support level, then you could look to buy calls, right? So just understand how kind of micro price action works. See how there's a lot of resistance on this stock right here. And then once it breaks above that resistance level, it explodes up to fill this gap right here. Once it fills the gap, it has a gap close reversal. And then it goes back down to fill this gap, which is towards your previous resistance levels. See how that works? See how that happens? The stock breaks out, it fills the gap, it has the reversal. Once the reversal comes in, once it reacts as a resistance, it goes back to that previous resistance level, right? And then that's gonna be that opportunity for the bulls to show if they truly are in control for the macro, right? And if this just wasn't a micro breakout, meaning if they turn this into support, they're still in control for the macro sense. But right now the bears have grabbed control for the micro, and the target's going to be 391 next week. In terms of DWAC stock, it's overall choppy, just kind of sitting. We could see something like this. This is what I'm potentially thinking, where it's just kind of sitting towards resistance, and then within some time a hard sell-off. That's what I think can potentially happen. In a situation like this. I think we're due for a sell-off. I would say within like 2 to 4 weeks, we can go to as low as a gap fill at $68.75. So I'm kind of bearish for the whole micro macro sense as of right now. I do believe this gap is going to fill within 2 to 4 weeks at $68.75. So use these price targets, use the price action to your advantage. In terms of the squeeze indicator, it's been triggered blue, which is very, very bearish consistently towards key resistance. And you can see it wasn't too long ago where this stock went from 91.5, all the way down to $60 very quickly. I think it's going to take some time, but overall we should see a gap fill. Once the gap fills, that's where you look for the opportunity to dip buy, right? So right now it's kind of put focused, call focus towards here. Use the confirmations. Confirmations have already came in terms of the micro puts, like I told you guys. In terms of, SCNS with this one, it's kind of weird. It's kind of choppy. You could try getting a put or shorting on the first red day. As of now, that still has not occurred yet. So we'll see. Not really too interested in that one. Not too interested in Lucid. From a macro point of view, I do believe Lucid is bound to go much lower within some time. It could take months, but like this is definitely going to like $20 in my opinion. I think we're going to go to like $24 to $20. Could take some months. That's like a more macro situation. In terms of PROG is starting to look bearish. Not the most bullish candlestick. I think what we could be seeing on PROG is something like this. See how it forms this candle right here. See how it's forming a similar candle, just not as weak as a close. I think we could be getting close to the top on PROG. But you do have to keep in mind though, in terms of this whole indicator, this has turned teal blue. So that is indicating a potential squeeze. Now for this one, the key is to really stay above 170. It needs to stay above 170. That's the key. Once 170 cracks, it's gonna be a very nice sell-off from a macro point of view. But for the bulls to really remain in control for the macro, the stock needs to stay above 170. As of now, it does look like we are due for a micro pullback to 170, and then we got to kind of see how it reacts from there. In terms of Disney, what I would do on Disney is check this out. There was a gap to fill right here at 155.44. Once you see that key level react as a resistance level, you play the puts, ride it back down to fill this gap below at 147.22. In terms of the daily chart, Disney is looking very bearish. It looks like it wants to go back down to 147 to fill this gap within some time. So yeah, you can look for puts on Disney as well to play for this 147 gap fill. Then if you see that react to support, that's going to be your opportunity to dip buy Disney stock. In terms of AFRM has released earnings. It bottomed out at exactly $50. It closed at 58.68. It's currently down in after hours. With that being said, best way to play this for the micro, like I said, for these stocks, if they can go back to their closing price of today, tomorrow previous closing price, then you're going to want to look to grab the puts, just like what would happen with SPY. If we can get some sort of micro morning spike, ideally towards that closing price, that's going to be your best opportunity to really play puts. But yeah, in terms of the daily chart right now with this whole candle, it looks weird. It really does. This whole daily chart right now, it looks very weird in terms of like reading it from a daily perspective. You do have a ton of support at $48 to $50 a share, and it did have a nice bounce once it hit $50. So we'll see. We'll see how this reacts towards a 50 to 48. If it looks strong, we could do a micro call. As of now, though, it does look like it's going to go back down to 50 to 48. So yeah, that's my thoughts. That's my analysis on the overall market and some of the top stocks that I am watching. Robinhood has been selling off nice as well. Looks like we're going to see some continuation on that. So yeah, we'll have to wait and see. Like for the micro, we could see some little spikes, but overall, I think we're due for some more downside heading into next week. So yeah, that's my thoughts. That's my analysis. Thank you guys so much for staying to the end of the video. For those of you within Trader Society, I will be live on the morning live stream. Gonna be live tomorrow at market open. Looking forward to training with you guys. I'll be in the chat active as well tomorrow. But yeah, guys, I will see you live at market open tomorrow, and I will see you within the next video as well. Thank you guys so much for tuning in. Make sure you liked and subscribed, and I will see you guys within the next video.